Update, guys. Today's Thursday. We took our last two trades today, and on the demo, that would make us officially have passed at $426. This is the last update for this week because from next week we're starting with the real. Everything from now is just preparations for the real thing, the prop firm, the real market conditions, the real psychological stresses, everything that comes with it. But this week has been great so far using risk management. Today we took a gold trade, which was an error at first, and then we took a US 30 trade, which brought it back 10 times more than what we lost. So let's break that down. So here, guys, is around the area we wanted to take buys for gold, the first signal that we sent out. And as you can see that in a way I already knew that this entry was kind of breaking my rules because we didn't see a fair value gap extend above our point of interest. So any retracement that came back into the zone, I already knew that the trade would be invalid. In that same way, I would have saved myself extra losses while also trying to get the most out of the trade early. But being early is always a reason for unnecessary losses. At the point that I'm marking out now was kind of the extension zone where I expected gold to go, even though I'd still aim for 1 to 3. This is around the areas where I could see gold playing around. Later, we did see that gold was declining, gold was reversing, that the trade was invalid, and I did send it to the group, the Alifa Bank group, the people that we trade with. It's okay though, because this is part of the game. This is understanding your edge on a deeper depth level. Price is pulling back heavy, basically engulfing the bullish candle, and this is kind of where I saw that price will be rejecting. I was still trying to see other possible trades for the day, looking at US 30, German 30, NAS 100, but then it was fine because I still understood that at the end of it all, if I save P's, if I save my losses, I know that the profits that I will get will still outdo any loss that I can take. So into the next point, it was US 30, the main trade for the day. I was basically still testing out the whole entry model for all of them, but for my prop firm challenge, for my specific trade of the day would have been US 30. As you can see, it was pulling back heavy into our area. I was expecting it to return around there, but it still wanted to push a bit more. Gold was invalid at this point. I already had told the group that the trade is invalid, that they could close it. All we were doing was just focusing on the best possible move for the day, because price will always move for the day. All you have to do is pick a direction. The game is a 50-50 chance. All you have to do is find the direction and move with the volume. This is why people get scared and hold their losers instead of hold their winners. If you can cut your losers short at the end of it all, you're still going to make P's because you can hold your winners much longer than you are anticipating. Gold, we're looking at shorts. Later in the video, you'll see how it went out, because I did give the group a re-entry signal for the ones that wanted to stick with gold. I was specifically looking for US 30, and the ones that only saw our messages in the group late, I was telling them to wait for US 30. We're still waiting for it to give us a little bit of bullish engulfing patterns, bullish signs. And as we waited, we're still looking for anything else that might be probable for a trade. Gold was definitely one of them. Not the best for the day, but one of them. US 30. Around this area, it tapped into the deepest zone of the FEG. It gave us an engulfing candle. After this engulfing candle, out of the zone, I knew that this is around the area we should be taking our buys. So then I started placing buys here. I originally lost, let's say, around $30 risking for gold. And then around this area, I was going to risk $50, keeping my risk the same. Later, when it moved, it gave us confirmation that we could enter more. Yeah, and as you can see there, guys, that's the sell signal we gave for gold. for the ones that still wanted to participate in gold. But this is the signal we sent for US30 to the new ones. As we're looking at US30 now, it was pushing, was giving us the confirmations that we need. It was super choppy, guys. It was super choppy. It was taking time to move, just up and down, up and down. We even had messages from our members asking if we still hold the trade. Hold the trade. The only time you exit the trade is if you had entered early and you have to take it out because it's invalid, or it has to hit stop loss. That's how it is, guys. You can't control what the market does, so you just let it play. So this is the gold sell, the sell that we're looking at for the other people. This was just a tech buy that I was only taking to see if it will reach my risk to reward, because it already had a push. It didn't retrace as much as US30, but it does not count for the breakdown or the case study that we're trying to make here. The only trade that mattered at this point was the US30 trade, and this is the trade that we were looking to capture the most from. US30 moved. It was giving us confirmation, and it took time, guys. This trade took so much time. It was getting so choppy. But we knew that's how the game is. So all I had to do is just aim for my simple 1, 2, 3. No biggie, just wait. Let the whole thing play out. Nothing difficult about this, guys. All you have to do is stay patient. And as we can see, it was getting choppy. It was starting its reversals. Then later, boom, we hit our 2 TPs. I waited for my TP2 to get hit. We all got hit. The whole group was celebrating. Yay. This was US30. We got the great moves. Of course, 1, 2, 3. This was gold. We got the 1 to 2, but we weren't really involved like that. And this was the NAS 100 trade that you saw me took, which also hit a 1, 2, 3. So there are a couple lessons that I learned that I want to make sure of before we start with next week's program. Understanding that volume is what's needed for the market to move. How do you spot volume? You need to see fair value gaps in any setup. Seeing fair value gaps is the first sign of seeing that there is clear volume in the market, but that alone is not enough for you to have a setup, because volume could push just to sweep liquidity before moving to the jaws of liquidity. So understanding price delivery will help you determine where price is going. Understanding price action is what's going to help you enter the trades at the right time at the appropriate place. So for next week, these are the simple things, especially this week if you've been watching. These are the things that I want to work on my real account, and then hopefully get a payout. Because the psychological part is that understanding that the more scared you are to lose an account or to lose money, the more you'll lose money. They stack up. Small losses stack up. Small wins stack up. So yeah, guys. Until next week for another episode. For now, I'm gonna go do my review. You guys do your review.